and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, it was a fantastic beginning to this truncated week for markets. Yesterday, the Nifty hit another fresh record high of 24,635 on the intraday basis. This was led by a broad-based rally that we saw, barring the IT sector. Largely all the sectors participated, and this is also despite none of the big heavyweights, barring SBI and ITC, none of those major heavyweights contributing to the Nifty's up move. It was a broader based rally that was participating, and PSUs of course were seen rallying yesterday across the board, be the PSU banks, oil and gas, those kind of stocks were definitely rallying. As we move into today, again the whole focus will be on the earnings front as well. Markets will react to earnings of Jio Finance, HDFC Life, SpiceJet. Those will be the earnings that will be in focus. Today again a whole host of other companies will be reporting their numbers like Bajaj Auto, Century Textiles, Alok Industries, CRISIL, DB Corp, Himadri Specialty Chemicals, Jubilant Ingriva, Justile, L&T Finance. These will be the companies that will be in focus again. And also today there could be a higher volatility as we are right ahead of the holiday tomorrow on account of Muharram, and we will have two expiries instead of one, which Shell will detail for all of you viewers. The big question is, can the Nifty bulls continue to defy the odds and move towards 25,000, which we'll continue to find out in today's trade. Good morning to all our viewers and good morning, Shell.
Good morning, ladies and gentlemen. We are on this fine Tuesday morning, and as I had mentioned last week when the markets peaked, मंगलवार है तो मंगल ही होगा, उसी की तैयारी करते हैं. और जिस हिसाब से आप बाजार में मोमेंटम देख रहे हैं, लेडीज एंड जेंटलमैन, प्लीज़ बी रेडी for a bigger blast on both global as well as local markets. As far as India, the Lal Street is concerned, we really don't need any overseas triggers, but some of them are coming and they are going to provide a lot of positivity as far as the overall general sentiment in the market is concerned, and they will come from Wall Street. Sakshi will give you some details of the speech that Jeremy Powell gave to investors yesterday, but get ready for a rate cut, and that rate cut is coming soon, and that will result in US markets rising very sharply, and ultimately they will add to the bullish sentiment on the Lal Street as well. As usual, we'll start with our Nifty picture. It ended at 24586, almost about 30 plus 14, 44 points below its all-time high, which was 24,634 in yesterday's trade. Each day the Nifty adds about 50, 70, 80, 100 points to its tally ahead of the budget. If you look at November 23rd, we have now just 5 sessions left, including today as well as July 23rd, to take advantage of this rally. I'll also like to show you another index today, which is the Nifty PSU Banking Index, and you will notice two dramatic changes that have come in. Yesterday's top gainer was the Nifty PSU Banking Index, and that, ladies and gentlemen, has shown a very sharp uptick of 3%. This is the beginning of the rally as far as the PSU banking side is concerned. Remember, the index is still below its pre-election day high, so it has a lot to catch up. The red thick bar that you see in the middle of the screen is the voting day bar. Before that is the all-time high, and the market is now betting everything that it has that PSU banks will start rallying. You've seen a very sharp move coming in on State Bank of India. I'll request the PCR to fire that chart. We've seen very strong moves coming in small cap banks such as Indian Overseas Bank, Bank of Maharashtra, Central Bank, J&K Bank. All of them rose between 3 and 4%. Data structures are very good. Please keep the PSU banking set in mind. Overall, the trend as far as the Nifty is concerned is very strong. The index at the moment is consolidating near its record highs, and as I have said, a lot of positivity is now expected from global markets. Sakshi's pointed out tomorrow is a holiday. Options premium will get squeezed. Bank Nifty and Fin Nifty, both of them will have their weekly expiry today. Fin Nifty usually expires on Tuesday. It's done nothing over the last 1 week or so, up just 0.2%. You'll see the chart right there in front of you. As far as the Nifty is concerned, the outperforming stocks are Federal Bank, LIC Housing Finance, and of course you've seen a very strong move coming in on SBI Life, Shriram Housing Finance as well. Keep these 4 stocks in mind. They are showing very sharp breakouts. Bank Nifty as usual last week has been next to nothing, flat as flat can be. Downtick on HDFC Bank, which is the highest weighted component, and uptick on Federal Bank. So nothing much expected on both these indices today. They'll be quiet in trade. But what's on focus, ladies and gentlemen, is the PSU banking pack, the rail space, the defense companies, the fertilizer and the agri space, all running up ahead in terms of the pre-budget anticipation that is coming in the market. Sakshi's pointed out some earnings that will be coming in. I am focusing on Bajaj Auto, Century Textiles, AB Money. These are the 4 or 5 stocks that I have in mind, and please keep an eye out on State Bank of India as also the smaller set of banks, Central, IOB, Bank of Maharashtra, JK Bank. They show a lot of traction coming in on the very strong side. Nifty, if you get a dip towards 24,400, that's an opportunity to get back into the counter. Remember, each day what we are doing is a gap of 50-70 points, then it fills up, it goes to the daily pivot, and from then on you have an uptick. So wait for the first 1-2 hours of trade if you're a long trader, and then get back into the market. My usual advice as far as shorters and people who do not believe in this uptrend is concerned, please do not short this market. We are in a massive bull run which will get bigger and better till the end of July, and if you don't believe in the uptick, it's best to remain a fence sitter, wait for the budget and the event to be over, and also pay attention to India VIX. It rose 3.5% yesterday. Sakshi.
Right. Shail, overnight, the US markets gained up 2.5% in trade, with the benchmarks hitting fresh record highs as expectations of a rate cut in September is now looking more possible. Donald Trump's victory in the forthcoming election has also seen increasing at this point in time now. The US Federal Reserve Chief Jerome Powell last night did say that the recent inflation readings had boosted the confidence in lower inflation, ramping up the bet that the central bank was close enough to cut the interest rates now. Now, as of yesterday's trade, Dow Jones ended about 0.5% higher at 40,212. Nasdaq climbed 0.5% again, and the S&P 500 added about 0.3% in the overnight trading session. The US 10-year bond yields also eased to 4.2%. Among commodities, gold futures extended rallied to quote about $24.30 an ounce. Brent crude oil futures languished around $85 per barrel. So that was nothing to be worried about. Also, as far as these stocks in Asia markets are concerned, it was a mixed trade in the early morning trading session following the gains on the Wall Street. Of course, we did see that the Nikkei was up by 0.4%, Kospi up by 0.1%. Hang Seng and the Shanghai, however, were seen declining in trade, and the Australian stock indices also slipped by about 0.1% each as well. As far as the GIFT Nifty is indicating, it's indicating a positive start yet again, although a mild positive start in today's trading session. As far as the flows are concerned, remember, the FIIs were net buyers of the stocks worth about 2,684 crores in the cash market. Domestic institutional investors, they actually stayed net sellers to the tune of 331 odd crore rupees as of yesterday's trade. Now, a whole host of stocks will be in focus today. Also, keep an eye out on the shares of domestic oil and gas explorers, because the government has announced an increase in the windfall tax on domestically produced crude oil, raising it to 7,000 rupees per ton from previous 6,000 rupees per ton. So, the entire space will be in focus. Geo Financials, of course, the earnings have come in. Revenue flat at 417 odd crores versus 418 crores. Net profit up by 0.6% at 312 odd crore rupees. We will also keep an eye out on SpiceJet. Here, on a consolidated YOY basis, revenue is down 19% at 1738 crores, and also EBITDA is down 83% to 16.3 crores as well. The margins have come in at 0.9% versus 4.4% as well a year ago too. Net profit, of course, it has come in at 127 crores versus a loss of 6.2 crores. So that's the bright light. When we talk about Angel One, Again, on a consolidated YOY basis, here the total income has come in 74% higher at 1410 odd crore rupees. This is versus 811 crores. Now, the net profit is up 33% at 293 odd crore rupees again. So, keep an eye out on this. From the FMCG pack, HUL will be in focus. The company will divest its water purification business Pureit via a slump sale to AO Smith India at an enterprise value of 601 crores. The FMCG giant said the sale is in line with its intent to focus sharply on the core strategies as well. Vedanta will be in focus. The company has opened its QIP, set the floor price at 461.26 rupees per share. Z Entertainment will be in focus. Here the shareholders have approved their plans of raising funds going forward. Century Textiles is going to be in focus. The company's unit, Birla Estates, has bought a 5-acre land parcel in Gurugram in Haryana with an estimated revenue potential of 1400 crore rupees. From the Pharma pack, Lupin is going to be in focus. The company has divested its US commercial women's health specialty business to Evofem Biosciences for consideration of $84 million based on future contingent milestones. Hatson Agro, the company's approved opening of a foreign branch in USA. Lal Krishna Industries, the company has completed settling up a mold manufacturing plant at the Bhuj unit with a capex of 300 crores. Ujas Energy will be in focus. The company has approved a bonus issue, 1 for every 4 held. It will also raise up to 500 crores via equity. PC Jewelers, IndusInd Bank has accepted a one-time settlement proposal from the company for unsettled dues in terms of cash, equity, release of securities and mortgage properties. Lemon Tree Hotels, the company has opened a 42-room hotel in Jamshedpur in Jharkhand. So those are some of the stocks that I'll keep an eye out on, Shail.
We'll also, ladies and gentlemen, keep an eye out on the entire central energy space, which is stocks like NTPC, stocks like Coal India, not to mention ONGC, Oil India, BPCL, HPCL and IOC. I believe that this is the week and the month and possibly all of August. You'll see a very, very sharp rally coming into all these counters for a variety of reasons. One, there is sector rotation happening. Two, there are 2 very large funds collecting NFOs in this space, and they will be buying it once the money comes in. So the smart guys will get into these 4 or 5 stocks ahead. NTPC, Coal India, ONGC, Oil India, HPBP and IOC. These are 7 counters that should be on the first list that you have. Sakshi, the markets have been immensely generous for people who pick up delivery, hold it for 10, 15, 21 month days and then probably book some partial profit. Beyond this, I do not wish to say anything else, but this is something that you need to look at. Also, I'm just trying to see if we can show the weekly chart of the US Russell 2000 index. This is the small cap index that the US has. Very, very strong moves coming in over the last 4 sessions, mainly because of expectations of a rate cut which have been delayed for a while. Sakshi's pointed out to low bond yields, the Trump trade working very well, and of course it's now the US Federal Reserve which says that waiting for 2% inflation to come will be delaying everything. So let's see what happens. We'll try and show you the Russell 2000 small cap share index in a while, the weekly chart, and you'll see how strong moves are likely to come in. It will also be a day when Mr. Dharmesh Kant, head of equity research at Chola Securities, and a little later Mr. Raudra Murthy, research head at Vachna Investments, will be joining us. The mood, ladies and gentlemen, on Dalal Street is fairly strong. As I had mentioned, the run up to the budget is being played out very well in the markets. It's best that you pick up delivery and then wait for the markets to reward you rather than do intraday trading. Sakshi.
So keep an eye out on several of brokerage houses reports that we are getting this morning. There is a slew of reports that are coming on the telecom stocks. So Citi on Vodafone Idea has a buy rating with a target price of 23. They believe Vodafone Idea's management has been optimistic of favorable outcome and believes government will also remain supportive. They also are looking at, to recap, Vodafone Idea 703 billion rupees AGR liability. A potential reduction could be 300 to 350 billion rupees as per management they have highlighted. In case that happens, that could be a positive trigger. On Bharti Hexacom, JP Morgan has come out with a report. They have initiated coverage with an overweight rating here and a target price of 1280. They believe Hexacom's spectrum cost is about 54% for 5G and 62% for 4G, lower than Bharti's national average, while ARPU is only 2% below, suggesting underlying returns will be superior. That's what they have pointed out. From the tire space, remember this tire space has been in focus and we were talking about it yesterday too. On Apollo Tires, Morgan Stanley has an equal weight rating with a target price of 472. They believe that the price hikes that have been done across the board by the tire companies show a focus on margins, and they see limited, however, they see limited earnings upside in the view of sharp rise in the commodity and the regulatory costs. But they still have an equal weight rating and a 472 target price, which is lower than the current price. On HDFC AMC, Jefferies has a buy rating with a target price which has raised to 4,900. And they believe the company has delivered strong Q1 earnings, and the core revenue has expanded by 35% year on year, and the visibility is strong as well. On HDFC Life, Goldman Sachs has a buy rating with a target price of 765. They believe it's reported an inline Q1. Retail protection has grown by a solid 29% year on year, along with higher life cover savings products, which have driven 46% increase in the sum insured. Also, the value of new business margins have declined by 120 basis points, but this is largely due to inferior product mix and higher investments. So those are some of the brokerage houses reports that have come in today. Let's welcome now our guest on board. Mr. Dharmesh Kant is now joining in, Head of Equity Research at Chola Securities. Good morning to you, Dharmesh ji, and warm welcome again. After a bit of consolidation, the markets are back on a record gaining spree again. Even yesterday, we have a fresh record high that we have seen upwards of 24,600 on the Nifty. Just about, less than a week left for the budget to be presented. How are you really looking at the momentum that is being built and the earnings that are coming in?
Yeah, good morning, Sakshi. Good morning, Shailji. Good morning to all our viewers. So the market has been on a positive trajectory for last 6-7 months, and every small or big correction has been immediately bought into, and that's the beauty of the market. I mean, if you are looking for some negative cues, unless market stays negative for a week or so, don't trade on the bear side or on the short side of the market. That is how the market is placed. Momentum is good, and the queries are still, very strong as far as fresh deployment of money is concerned. I sense that going into the budget, we will be going with a strong positive bullish bias, and so has been the case with the overall global market as well. So no negative cues coming from any side of the market, and that is helping the all buyer market into this scenario. Most of the stocks which is related to the budget theme has played to the fullest potential, and this last week you will see more of some speed up momentum kind of things building into, say, railway stock, defense stock, or fertilizer and agri theme. So similar plays will see momentum tagging up. But we have advised our client to stay put, not to book profit anywhere. And we'll see after the budget how to restructure or rebalance the portfolio. Till that time, we are holding on to the long positions. And the sectors are the same which I spoke about.
Right. Good morning to you, Dharmesh ji. A very warm welcome. It's always a pleasure to host you on Business Today television, sir. We'll just like to take your views on the public sector PSU stocks on the banking space. They haven't participated as much, and the PSU banking index is the only laggard, not hitting a high so far. Apart from SBI, any mid-cap banking stock on the government side which you believe is underappreciated at current levels?
Yeah, good morning, Shailji. I mean, if you look at the business update by most of the companies, for the Q1 from the banking space in the public sector. So it was not very, gung-ho. It was more of a lackluster kind of a business update. Anywhere between, advances grew by 9 to 10% kind of a zone. So still into single digit to high single digit kind of a growth is happening out there as compared to most of the private sector players who have reported 17-18% kind of advances growth. Bank of Maharashtra came out with their numbers and yesterday, and the numbers were quite encouraging. So that remains an outlier on the public sector banking space. But what we do feel is the only problem, Shailji, in this market is if you look at the valuation, be it public, private, anywhere. So they all are pretty stretched. So comfort of justifying for a risk reward ratio perspective has become relative. So if somebody is trading at say 4.5 to 5 times price to book, and in the public sector space you are having 2.5 times, you feel it is comfortable to go for a public sector names. But even this 2.5 times is 10-year high plus one standard deviation kind of a multiple these banks are enjoying as of now. Earlier it was say 1 or 1.2 or 1.5 times kind of a price to book multiple they used to get. So having said that, still I mean, just for a bargain for next 2 quarters, I think Bank of Baroda and Canara Bank still looks promising. I would be avoiding PNB and others at this juncture. Even Bank of Maharashtra is almost 2.5 times price to book. So if you are getting something like Canara Bank or a Bank of Baroda at a similar multiples with a larger reach and pan-India presence, I think they are better bet compared to the others in the same basket.
Okay. Well, Dharmesh ji, I wanted to take your view on Geo Financial after the earnings. How have you assessed the earnings, and what should be an ideal strategy now on GeoFin after the earnings?
Sakshi, as far as Geo financials are concerned, one should not be looking at it from a quarterly basis kind of a thing. It's a work in progress as far as the company built-up is concerned. And if you are taking a view of a long term, say 2 years to 3 years, so I mean, these prices are very cheap prices to get into, hoping that the things will roll out the way management is already outlined. And the other bet is on the promoter itself. So I am very bullish on the entire Reliance group of companies and the promoter because whichever business they take up, they take time. They take 3 years, 4 years time to get it into build block by block. But that building is very superb. I mean, the proof of the pudding lies in the fact if you look at Reliance Retail or Reliance Jio, so all have shaped up pretty large. And same I am expecting from Geo Financials going forward. So it's a stock to hold for at least 2 or 3 years kind of perspective to get a multi-bagger kind of a return.
Right. Dharmesh, the other space that's buzzing in the market is railway and defense. Of course, these are pure now momentum driven stocks, whether it is Texrail, JWL, Titagarh, or the five government run railway companies. What, according to you, is a space within railways which should be looked at beyond the budget?
Very difficult strategy. I mean, beyond the budget, if you look at valuation multiple, you have to wait for 2 or 3 years to justify the kind of run-up which most of the railway stocks have seen. For example, RVNL and all. So we recommended that, and yesterday only I was seeing from 6th June till yesterday it has moved to 70%. So that is the time of return you are getting. And these companies are companies which can't grow more than 15% year on year because of the very basic nature of the fundamental nature of the businesses they are into. So for a manufacturing company or a construction company to have a 30-35% kind of a growth is unseen. It's not possible. So the problem arises out there. Still, if somebody has to, play the theme, then I think one has to focus more on the technology side of the railway companies, and there I think Railtel or Aircon comes handy, where it's more to do with technology enabler of railway systems rather than pure I mean wagon building or a track laying or a bridge building. So those spaces should be avoided. You can go with Aircon or Railtel, but this is again a pure momentum play, as you have been rightly pointed out at the start of the conversation itself.
Okay.
I think Sakshi and Dharmeshji, one thing that investors need to keep in mind is that we have been, so getting used to this 5, 10, 15, 20% moves every week, that it is becoming very difficult for long-term equity strategists and analysts such as Dharmesh ji to keep on justifying valuations. Remember, in the short term, the market is fed by liquidity. You should never, never, never fight liquidity. But in the long term, it is a slave of earnings. If the market goes dramatically higher in the short term, over time returns will harmonize and it may do nothing. But such is the flow of liquidity on a monthly basis. About easily 80,000 crore rupees are coming into the market, fresh 80,000 crore rupees, and they are looking at investment opportunities to buy into. Sakshi.
Absolutely. Dharmeshji, on the increased windfall tax on the domestic crude oil producers, how are you looking at this space and how should one really look at stocks like ONGC that have been rallying a buzz, even Oil India for instance? These are the stocks that have been buzzing over the last few days.
Actually, I mean, this windfall tax thing is a non-event for the markets or for the companies. We have seen it come and go, increase and decrease many a times in the past, say, 1 year. It has not done even a percentage point on the stock price or the valuation. So it should be completely avoided. And it's a very minuscule. If you look at the quantum of the money which these companies have to shell out, is not at all, needle moving. So one should not be looking or reading much into it. And I don't see crude basket, trading above $90 a barrel on the Brent side. So it's also range bound, and this is being well adjusted into the pricing. Let's not forget, government has still not, told the refiners or the oil producing companies to bring down the cost in aligning it with the international prices. So they are enjoying this huge profit gap because of the pricing power which they have.
That's right. Well, another thing that I wanted to discuss with you, Dharmesh ji, is just on Varun Beverages. Actually, I forgot to mention one brokerage house report that has come in. That in fact there are two now. Morgan Stanley on Varun Beverages has an overweight rating with a 1700 target price, and Motilal Oswal has a target price of 1900. This is after the company has announced acquisition of rights to manufacture, distribute and sell PepsiCo's snacks brand Simba Munchies and in both Zimbabwe and Zambia. They are also expanding product offerings and gaining additional rights for PepsiCo, which they believe is a key growth driver. How are you really looking at this stock, sir?
Think that this is an absolute, buy and hold kind of a stock. You should not be looking into the valuation multiple of this company because the cash flows are very strong. The management has been able to deploy their cash flows very effectively. So return on capital employed is more than 25, 26%. So if a company is compounding its return on capital employed at more than 25% consistently over 5, 6 years and getting all the things right. So they have proven their execution prowess to their counterpart companies from which they are getting the order, and they are reaching now they are going beyond India. So huge market size they are catering to, and going by the way the management has been, I think this growth will continue for next 5, 6 years. They will be capturing more geographies into third world countries where the business lies for them, because first world is already occupied, so they don't have a chance out there, and they are doing the right things right way. Valuation wise, difficult to justify, but the only suggestion here or the advice here is if you're holding it, keep on holding it and stay invested for long term, 5 to 6 years. It will still be a develop from here. So it's a multi-bagger kind of a company.
Absolutely, and one reason for the bull markets to rise even more dramatically is the lack of stock. Smart investors, institutional investors rarely increase liquidity in the market on stocks which they feel will compound in the longer term. That, ladies and gentlemen, is the pre-open number in front of you. 143 points down, 24,444. Remember, 24,400 if you get on the Nifty. That's a place to come back into it. Now, what are the stocks that are causing this pain on the index? Reliance, 19 rupees lower, 31.75. It's the earnings boy this week. Let's look at Infosys. The counter at the moment is right there in front of you, trading flat at 1707. HDFC Bank, thankfully 11 rupees higher, 1633. Now let's look at stocks that are in a good uptrend. TCS, 2% higher, 42.52. Remember, it delivered a muted performance, but the markets liked it. Yesterday was profit booking. Today the market is back in action on the long side as far as TCS is concerned. Everything else is in flat shape. There is a wrong trade coming in on ICICI Bank. It is showing 5% lower, but this will improve dramatically. So 1170 is not what ICICI Bank is going to open at. That means that the Nifty will be back up in the green, because now ICICI Bank is the third most heaviest weighted counter as far as prices are concerned, weightages are concerned on the Nifty. Okay. Realty and Realty all the way. Raymond, another 5%, 22.99. Remember, this is the demerged real estate business now available on the exchanges. What else is ticking? You have MTAR Technologies, 2% higher, 1987. Motilal Oswal Financial Services, 3% higher, 547. You have a strong move coming in on Cera Sanitaryware, 4% higher, 93.99. The Nifty is back in the green, ladies and gentlemen. Let's look at some optionality in terms of green ticks and a strong uptick in price. Okay. HBL Power. Now this is again a real estate, this is again a railway play on the Kavach and the battery side, 4.5% higher at 666. Please keep this stock in mind. M&M 2% higher, 27.85. A very quick dip into FNO, and then we'll get back to Dharmesh ji. Okay, nothing of interest. HDFC Bank now down 1%, 1606. ICICI Bank is improving. I'm sure it will come back in the green, nothing to be worried about. Okay, nothing of consequence that I see. Indigo 1.3% higher, 44.40. Trent 1% higher, 57.38. Back with Dharmesh ji and tackling the current problem that the market is facing. HDFC Bank, Dharmesh ji, nothing at all. What is the reason for this disappointment?
Yes, Ali, I mean, I don't know whether you remember or not, prior to this move which HDFC Bank witnessed, I was very clear on the take that if you are stuck, please book your profit and be out of that. There are few structural problems in HDFC Bank. First is the growth factor. I find it very difficult to come by in excess of 15% on the asset side. Second is they have announced branch expansion for next 2 to 3 years, which have a very high cost entail, and it's a brick and mortar branch expansion. When everybody is going online, this bank, in spite of having a pan-India group presence, is going on a brick and mortar kind of a branch expansion, which will push their cost to income ratio far higher. And the third factor, which is a well-known fact known to everybody, is the CD ratio. It's still above 103. That kind of a CD ratio, I mean, RBI governor has sounded quite time and again. It will be difficult to let the banks have this kind of a CD ratio. It has to be manageable risk, and that is around 80-85% is the tolerable or a tolerance band. Though officially no strictures have come on that, but this is how unofficially the message has been conveyed. So till that time it comes down, you need a good deposit base growth. And last quarter update, the bank reported a negative growth on the deposit side as well as on the AUM side. So fundamentally, I think it will take a lot of mammoth talks from the management and a lot of aggression from the management to build the deposit base far higher and then cater to the growth. So till that time it happens, this stock will languish in a zone, and it's a sell on every rally to my mind. You have much better plays in the form of, say, ICICI Bank, Axis Bank, if you want to play the large cap ones, or SBI for that matter.
Okay. Dharmesh ji also wanted to just look at this stock Hatson Agro for all our viewers. This stock, remember, was buzzing yesterday after the earnings and the dividend announcement. 600% dividend announced and 63% jump in the net profit. As yesterday also the stock had been moving, and today again there is an uptick of about 8.5% at 1290 odd rupees. Anything that you would like to suggest, sir, on Hudson Agro? The stock has been continuously buzzing over 130% kind of a move in the last 5 years is the kind of momentum that we've seen on the stock.
Yes, actually, we do not track this actively, so
Okay.
won't be able to comment on that.
Okay, no worries. How about PC Jewelers? Do you track that stock, sir? There is a positive development that has taken place as the IndusInd Bank has accepted a one-time settlement proposal from the company for all its unsettled dues. We've been seeing a momentum build up on PC Jewelers all across last 2 weeks. Again, today there's a 3% indication of an uptick. How would you look at this?
I mean, this is a news-based kind of drive up the market, and in fact, if you look at last 2 quarters, kind of business update for most of the jewelry companies, that includes PC, Kalyan, and Titan. Also, new jewelry sales was not happening. What was happening in these companies was the old jewelry which people were having, they were exchanging it, and because of that, their margins came under pressure, and the growth was not to that count. Initially, the valuation multiples which these companies enjoyed was on a basis of say 25 to 30% kind of a CAGR happening on the business front, which is now a suspect. Gold prices have also risen up very sharply in the international market, so that always has a negative impact because the volume of the value remains the same with most of the purchasers out there. And people, if you look at the spending, they are, I mean, all big HNIs and the people are more into the residential side of the market. So that focus has again come back. And jewelry has taken a backseat as of now. So we, as a trade, you can still take it. I mean, there can be trading plays in around, but I think for next 6 months, till the gold prices remain elevated levels, these companies are best avoided from a investment perspective.
Absolutely. I think the point that Dharmeshi makes that such companies are best avoided as an investment is the maximum that we can say about the stock that appeared on your screen. Dharmeshi, any view that you would have on the pharma space? We are seeing a very strong bull market being unleashed on mid-cap pharma like Aurobindo, Lupin, Natco Pharma, even the likes of Wockhardt, Concord Bio. What would be the best pick in the mid-cap space?
Yeah, definitely, Shailji. I mean, the one positive development which has happened in the pharma space is the price erosion which was happening in the US market has come down significantly. So that has decelerated to a quite extent, and most of the generic drugs have now stabilized as far as the pricing is concerned. No upside on the pricing. These companies won't be able to take a price hike for the products which are being sold into the US market. At the same time, US FDA has been a quite considerate for the Indian pharma companies of late. So last 6 months, you have not heard any negative news flow on the products being manufactured by Indian companies, or they may have adopted a best practices for that matter. So that is driving these companies. At the same time, they have got a good traction in the domestic markets. Most of these pharma companies, if you look at the revenue growth numbers from the domestic business, is far higher than what they are getting from the US or the European side of the market. And so this is likely to be there for say 20-22% kind of a CAGR on the top line with stable EBITDA margins has been expected. There in this basket, I think Aurobindo Pharma remains the topic. There was an issue earlier, which I think is will be resolved to the benefit of the company. And pricing wise, valuation wise, it's still cheaper compared to Sun Pharma or a Cipla. So from large cap peers, it's still cheaper. You have a value out there as far as valuation multiple discount is concerned. And from the mid cap space, it's the most promising with the injectables and new launches which they are forecasting for the coming year. So that is one company which one should be stay invested into. But as a basket play, as of now in this market, I do think pharma companies offer you maybe a limited upside, but the downside seems to be protected in the current market environment. So if you ask me, the top three picks would be Cipla, Sun Pharma, and Aurobindo Pharma.
Okay, fair point. Mr. Rudramurthy joins us. Good morning and a very warm welcome, Mr. Murthy. Your two stock picks, which you think will outperform markets today on technical charts, either on the long side and God forbid on the short side too.
Very good morning, Shailesh. Thanks for having me on the show. See, first of all, this is not a market to short and no short ideas as of now, at least at this point of time. And on the long side, I'll give you my top two picks. Number one is Biocon. In fact, mid-cap pharma has been doing very, very good, and both fundamentally and on chart, I have a lot of valuation comfort fundamentally on Biocon. And if you observe the chart of Biocon, yes, having made a top at around 370-75 zone, it just gave a good profit booking and a small correction. And now the strong support for this stock is at around 350. After the last 4-5 days of that profit booking, the uptrend is again resuming back, and it is giving you an opportunity to enter at good level. Risk reward to buy Biocon at current market price is very, very favorable. Keeping a tight stop loss of around 345, I'll be a buyer in Biocon, looking at a positional target of 385 to 400 to come on Biocon. And also mid-cap pharma as such, whether you look at Dr. Reddy, you look at Lupin, all these stocks are doing fabulous. In fact, even Aurobindo Pharma made a big move yesterday. So for me, pharma, especially mid-cap pharma, can do very, very good. And in that, my top pick at current market price, both on chart as well as fundamentally, will be a buy on Biocon. And if I have to pick another stock, yes, for me, IT looks very good as a sector. Yes, yesterday was a day where we saw some profit booking, but that was post a very big rally, which you have seen in most of these stocks, like whether it is Infosys, whether you take even Wipro, Tech Mahindra, a lot of these names. So for me at current market price, Wipro looks a very, very strong buy. It has given a clear breakout at levels of around 545, and even at your show only, I was recommending Wipro from levels of even 470, 480, and now stock having made that big move and having consolidated very well, it is giving a rounding bottom formation with a breakout at levels of around 545. So any dips to levels closer to 545 or even at current market price, I will be a buyer. On dips, I will add to my positions in Wipro. Keep a tight stop loss of around 530 and look at targets of around 620 to 650 to come on Wipro. And I won't be surprised if you can give a 2-year time frame on Wipro, you will see levels closer to 800 to come on Wipro. So I'll be a buyer in Biocon, I'll be a buyer in Wipro, and you have a lot of stock specific names to buy in this market, and you have to be sector specific and stock specific. Be cautious on mid and small cap, and especially on those stocks where fundamentally you don't see that progress, but only stock price have moved up too much. That is the reason or region where you have to be careful. But large cap, still you have a lot of valuation comfort, and pick up right sector and right stocks now.
That's a wise advice coming in right there for all our viewers from Mr. Rudramurthy. The market's largely settled. We're just about a minute away from the opening. Seems like it's going to be a metal day, about a 0.5% in increase that could be indicated. Realty, auto, mid caps, of course, indicating a record high move right there. Bharti Airtel could be seeing a percent uptick in trade today. Mahindra and Mahindra, Infosys, Ultratech, Cement, Grasim. Those are the kind of stocks that we could be looking at. Rudra, very quickly, 15 seconds, how would you really look at the cement pack, your top counter there?
See, for me, my top bet is India Cement. Yes, you got a very, very clear breakout on this stock, which was at around 271st, and then having moved above 270, 275 zone, you could see it came back and tested that support, which was earlier acting as resistance. So now, yes, even yesterday the stock gave a good move. See the support from even volumes when this move happened. It is a very, very good sign. So I don't know about the fundamental news of just that Ultratech trying to take stake here and few other developments which are happening, but I can clearly tell you on chart, keeping a tight stop loss of 290, I will be a buyer positionally in India Cement. Look at targets of around 335, 350 to come. And also another stock, if I have to pick from the same sector and you want to also have a plethora of few other things to add on to cement, yes, I'll be looking at Grasim Cement.
Right. Let's focus on the markets, please. Nifty is open 32 points higher. A green tick of Nifty Bank, which is seeing its weekly expiry today, 145 higher. And then IT index is again a 100-point uptick that you see. Nifty 500 is opening stronger than the Nifty, so the broader markets are fine. Let's look at what's happening in the index heavyweight space. HDFC Bank 55 paisa higher, 1622. How about Reliance? Reliance is 3 rupees higher, 31.97. There is TCS flat, 41.71, and you have a decent move coming into Hindustan Unilever, 0.5% higher at 26.34. How about Infosys? Infosys is 7 rupees higher, 17.13. Remember, all three index heavyweights, Reliance, HDFC Bank and Infosys, declare earnings over the next 2 or 3 days. Let's look at the top traded counters with gains. No stopping IRFC. Top traded 216 rupees, 216 rupees, and this is just 0.5% higher, nothing much happening there. Keep an eye out on Vedanta, ladies and gentlemen. A QIP worth 8,000 crore rupees is open. This is the second most active counter at almost 463. A strong move coming in there. Top gainers here are Century Textiles, a 5-acre plot in Gurgaon, adding 8% to Century Textiles, 2266 as far as prices are concerned. HPL Power, 3% higher, 649. You have a strong move coming into Motilal Oswal Financial Services, 4.5% higher, 554. Castrol India in strength, 2% higher, 272. Angel One in strength, 1.1% higher, 2304. IRFC flat but still in the green. This is what is happening in the market. I think it's a day that belongs to the Nifty PSU Banking Index. We'll just mark it very quickly for you. Let's see which is the top gainer. It is indeed the top gainer. 0.8% higher, 7482. This is what the index is telling you. And within the PSU banking space, okay, Bank of Maharashtra 2% higher, Punjab and Sindh Bank 2% higher, Indian Overseas Bank 2.5% higher. All across the board, all 12 stocks in the PSU banking index are in the green. Coming to you, Mr. Murthy, any PSU banking stock that you might feel is outperforming?
See, for me, in the same order of priority, I'll be first picking up SBI. If I have to buy the PSU bank, SBI at current level is a clear buy. Look at initial targets of 910, 920 to come on SBI. My second pick will be PNB. Very, very strong support at 117, 118. And now having tested that support, stock looks very, very strong, headed towards 135, 140 zones. So one can look at PNB as a second best option. And thirdly, I'll be looking at Canara Bank. Again, after a great consolidation, testing its support at around 115 now. So for me, Canara Bank will be my third choice. So SBI, PNB, Canara Bank.
SBI, PNB, Canara Bank, those will be the top choices right there. Let's again look at what is buzzing within the broader market space. Dredging Corporation is back in action. It's a 5% uptick on this stock yet again. You do have some other stocks that are finding their place within this space. Hudson Agro, like I had pointed out, it's again up 10% in trade, 9.7% higher right now. You have stocks like Muka Proteins that have been continuously rallying. If you look at last week itself, this stock, after getting listed, it was lying low, but from last few days it's continuously in momentum. Today again there is a sharp uptick of about 10% on this stock. Then let's also look at not too many names within the broader markets, but you know, Coal India is ticking sharply higher, 1.4% up right now. ONGC 1.3% higher. You have BPCL that's also buzzing in trade. Adani stocks are back in action. Adani Enterprises, Adani Ports, they seem to be coming back into the fore as well. You also have some other stocks. Telecom space entirely is in focus. Bharti Airtel, Vodafone, Idea, all of them are up and about. Within the FNO space, you also have IEX that's coming back into action. Banking space again, Bandhan Bank that's also buzzing within the FNO space. Realty space is the one that is taking the top spot in terms of the momentum that is being seen across the board. Let's see some of the counters right there. Brigade Enterprises, Sobha Phoenix Mills, Prestige, Godrej Properties, the entire space seems to be abuzz with action. Let's get Dharmesh ji into the conversation. Dharmesh ji, real estate space for you. Do you think there is enough and more action that could continue and one should focus here?
Yes, actually, I think it's in to the last leg of its uptrend. So the momentum is still there, and even new launches which are there of late, they are being sold into basically into the premium segment of the market. So that is where the entire budget is coming through. I think going forward, I mean, this sector is likely to peak out, say, next 2 to 3 months kind of a time frame. So second half won't be seeing a price action largely into the real estate stocks. Most of them are valued at +2 standard deviation of their usual averages of 10-15 years, and the best is already being priced in. Though going forward, I don't see a downside into these counters. There won't be sharp profit taking or things like that won't be happening out there. It will go for a time bound kind of a correction. Still, if somebody is willing to put fresh money into the space, I think Phoenix Mill and DLF, these two counters still looks promising to me for say 15 or 20% more upside left out there. Other than that, balance of it is 5 to 10% kind of upside still may be there, but that should be the last leg of this rally.
That should be the last leg of the rally. Okay. Mr. Murthy, Bharti Airtel for you, 1.4% higher, top mover on the Nifty right now. Where is the stock headed?
See, for me, definitely this is a stock one should have on their long-term portfolio. And yes, valuation comfort right now is more in large cap compared to the broader market or even your mid and small cap. So strong support for the stock is now at around 1420-30 zone. So every dip is a buying opportunity for me. And after last 7-8 days of consolidation, today you have seen that breakout above 1450. So for very, very short term, I will be a buyer at current market price. Bharti Airtel now is at around 1457. So buy at current market price, and on every dips to 1450, keep a stop loss at around that support of 1415, 420, and look at targets of around 1550 to initially come, and even beyond that Bharti can do good. For me, another play in the similar sector which can do much, much better will be Indus Tower. Indus Tower, after a great consolidation and a move which is continuing even now, yes, for me, Indus Tower at current market price, one can buy in equity because I think it is an F&O ban. You have to buy it in equity. I can see targets of around 450, 460 to come on Indus Tower, and one can have a tight stop loss of 380 for the same. So Bharti Airtel a buy, Indus Tower a buy.
Across the board in the telecom space, there is a lot of action. Bharti Airtel, Vodafone, you have the entire space abuzz. Even MTNL is pulling up in trade. Bharti Hexacom is now 5.5% higher after that brokerage house report. So the entire space is abuzz with action. We'll continue to keep an eye out on this entire space through the day. Shail, yours.
Ladies and gentlemen, the telecom minister is meeting the entire telecom universe, including Mr. Mittal, including Mr. Akash Ambani, and the other telecom companies are also being represented in that pre-budget meeting that's slated to happen in New Delhi today. We'll keep you updated, and that's the reason why you see this very strong up move coming in. What's clicking today is sugar. We track 33 sugar stocks for you, and just one of them is in the red. We will not focus on that one, but Balrampur Chini taking it away, 2% higher, 453, very strong move there. KCP Sugar Industries 2.4% higher, Dalmia Sugar 3.5% higher. Dharmeshi, this is to you. Mithas is getting added into this beautiful bull run that we are seeing unfolding in front of us. One stock in the sugar space which you think makes sense. This is again under-owned, underappreciated and undervalued space of the market.
Shaili, I mean, going into the budget, every sector is having its run under the sun. So sugar was long due and it's having it. The space itself, it's more of a cyclical trading play. So I mean, Rudramurthy would be a right guy to time it up for you because of the international prices and everything. The only fundamentally what I have tried this sector for the last 15 years. And fundamentally, the volume of take for sugar has not grown by more than 1% globally, the consumption wise. So where you have a demand growth of not more than 1%, at the same time, there are so many pricing restrictions being here and there in India. So it becomes very difficult to, play these companies out as a wealth creator. The only factor which played for them was the ethanol blending. But even that, the jury is out with a lot of EV vehicles and solar and everything coming. Now you have the CNG bike being launched by Bajaj Auto if that becomes a success. So this ethanol bonding will again take a backseat. It's a trade, you can play it out. And maybe if one is like as a trade, if you want to single me out, Balrampur Chini remains my top pick if I have to play a trade out there. Otherwise, we normally avoid, we give it to a technical team to time this out.
Absolutely. Sakshi, we tracked 19 indices. Out of 19, 18 of them are in a very strong uptrend, a nice shade of green across the Lal Street, even though the Nifty is doing pretty much nothing, just 28 points higher. So the Nifty Realty Index, led by Century Textiles, a percent higher, 1118 for you as far as the index is concerned. The Energy Index taking it away, 0.3% higher on the Nifty, 43,459. And thankfully, ladies and gentlemen, thankfully, you have profit booking in railway stocks. They were just beyond the pale of understanding when it comes to short-term movement. Therefore, thankfully, a 3.5% downtick on IRCON, 324. RVNL, 3% lower, 607. TexRail, 2.6% lower, 274. RailTel, IRFC, all of them down about 1.5%. What is clicking and clicking very well is the entire cement pack. JK Lakshmi Cement is in the green. You have a strong move coming into India Cement. This is something that we can track. Let me just get you a very strong view on cement. I have about 34 cement stocks in front of me. Okay, Sakshi, what are you watching?
Well, Shail, of course, there is an entire buzz in the cement pack again, which is led by Shri Cement, also in the F&O space, about 3.5% high in trade. India Cement was already highlighted by Mr. Rudramurthy as one of his top choices right there. We have Grasim that has been buzzing too. That's another one. Even the auto space is coming back to the fore. So Maruti, M&M, they are also looking good as of now. They're also moving up in trade. Bajaj Auto right ahead of the earnings. That will be a good one to discuss with Dharmesh ji. Dharmesh ji, Bajaj Auto comes out with the earnings today. Your own sense, any expectations right there that you have from the two-wheeler maker and the entire space with respect to the earnings that could come in from the auto sector, sir?
Yes, actually, I mean, the earnings won't be, very encouraging because we know the auto sales number for the quarter gone by, so that was less than 10% kind of growth on a quarter-on-quarter basis. So there, the disappointment is there. At the same time, their, exports have come down, where the, original expectation was that exports would be good. So those two are the key dragger out there. So management commentary, how they comment about the growth outlook going forward would be a key. And I'm sure they would be speaking a lot about the CNG bike launch, but CNG itself has its own set of challenges. I mean, the refilling of the gas itself is a big challenge, though it's a hybrid. So you have a 2 liter kind of a petrol tank as well to support it. So it will be more centered around how the management outlines the commentary based on the present numbers. Definitely, I am seeing 50 to 70 basis point kind of a margin contraction going forward. So these are the negatives which is largely known to the market. And going forward from here, valuation wise, you are at the peak of your valuation multiples. So hope trade is out on the volume growth. So again, volume growth for Bajaj, it has been last 10 years, they have been striving to go ahead of 5 lakh bikes per month kind of a sale, which is still, they are finding it hard to come by. So let's see what's the commentary is in store. So I would be more looking into the management commentary rather than the numbers itself.
Okay, got that. So that's how we will be continuing to focus on the auto space. One stock that I wanted to discuss with Mr. Rudramurthy is IREDA. Remember, the stock has been continuously buzzing. Yesterday, it reacted to its strong Q1 earnings, went up to a record high. Then there was a brokerage house report as well. We also had the management, which was very, very confident of the order flows and the targets that they have set for themselves for 2030. To become a Maharatna and to achieve that, the kind of growth projections they have shared on loan disbursements growth as well. But there was a brokerage house report that indicated that there could be a sharp downtake of about 58% from the current market price on IRIDA, and after that we've actually seen a dip today, 3.7% lower on IRIDA, 278. Mr. Rudramurthy, what do the charts suggest?
Sakshi, for me, what is important is not just buying a good company, but at what price are you buying it? There is a difference between a good stock and a good company. When I buy a good company at fair price with lot of margin of safety, then it will become a good stock. And similarly, I always say it is still better to buy a good company expensive rather than buying a bad company at a cheaper price. So what I'm only trying to tell is IRIDA, if I'm not wrong, when the IPO came and whatever move you have seen from that price to today, it has been a 6-bagger or a 7-bagger, 700% kind of a return in 7 months. In fact, the returns have been more stronger than a lottery ticket. I'm not against the company, but I'm against valuation and the price at which currently it is trading. Buying at current market price may not offer any margin of safety whatsoever. If you have the stock, you can hold on. But fresh buying is not suggested. You have to wait out now for long years if you want to see further more appreciation from current market price. I would definitely advocate a switch. Any stock from railways if you have, or even from some of the shipping companies, whatever you have. So this is a good time now to exit them and shift to something like, let us say, IRCTC. IRCTC, again a PSU, again a stock which has fair valuation at current market price. And if I'm not wrong, stock from 5,000-6,000 is now available at 1,000 rupee. And it is more or less for me a fair price today to buy IRCTC. So shift from stocks like your IREDA and few other stocks which have run up 600-700% in no time. I'm sure fundamentals have not gone up, neither their sales nor their profitability has gone up 700%. So this is definitely a fair time to shift from those stocks to stocks like IRCTC, where you have valuation comfort. Or even if you want to pick up few more stocks from PSU, look at ONGC, look at Coal India, look at even SBI. So these are stocks where I have still valuation comfort, and I will definitely switch into these areas like Coal India, IRCTC, ONGC from stocks like IREDA, or even a lot of your shipping companies like whether it is Cochin Shipyard or Garden Reach, or you go with Mazdog. All these stocks for me are richly valued. No doubt they are great companies, but I doubt if they are great stocks because of valuation concern.
Okay. 9:33, ladies and gentlemen, we have nearly a flat market, but a very, very enthusiastic cash market, which is coming back onto the focus. Mr. Murthy's advice on being very, very careful on the long side as far as momentum stocks are concerned is very well taken. Today, Sakshi, is the turn of profit booking in railway stocks, but defense has picked up the baton, and you see a very, very strong move coming into Mazdog, 2% higher, Garden Reach 1.9% higher. You have Cochin blinking in the green, 1.6% higher, 27.89. The entire pack, BEML, BEL, BDL, all of them showing decent upticks. Now, what has also started moving is the fertilizer space. You see a nice green tick on Deepak Fertilizer, fairly decent moves coming in at 800.5. This is a block deal that's happened for 2 plus 1.7, about 4 crore rupees immediately, and this is something that needs to be checked on the screen, because it is something exactly what we are looking at as a pre-budget run up. Deepak Fertilizers for you on the screen as far as the chart is concerned. Oh, a very strong breakout. Mr. Rudramurthy, what is Deepak whispering in your ear as far as prices are concerned? Where are they headed?
Shailesh, buy at any price. This is a stock which I have been also watching very closely from 550, 560 level. Yes, no doubt from there the move has been very fast and swift. In fact, a good entry price for this stock is at least another 50 to 70 rupee down. So somewhere at around 730, 750, I'll be a buyer. Or even at current market price, for me, this is a better buy compared to some of these high expensive momentum names which we just now spoke about. So I will make a shift into fertilizer. Deepak Fertilizer will be my top pick. Even look at stocks like GNFC. So this stock for me has lot of comfort in valuation even at current market price. So yes, GNFC at around 690 offers a great buying opportunity. It is a good risk reward to enter at current market price. You buy it at around 688, 690 right now, and I'll be keeping a very tight stop loss of around 665. And I won't be surprised to see this stock even moving towards 750, 760 zone. It is something like a 1 is to 3, 1 is to 4 kind of a risk reward. Stock also available in futures. So GNFC is a good buy. For me, as I now spoke, even Deepak Fertilizer is a good buy. So these are stocks where I have valuation comfort. Momentum can also get built up. And at current market price, they are good buys. I'm not against some of these shipping company names or against even these railway or defense stocks. They were great stocks 7 months back, 1 year back, 2 year back, where you had margin of safety and price comfort. If you are buying it today, unless you have a time frame of at least 3 to 5 years, I may not be surprised to see these stocks giving any returns from current level because it has already moved up too much beyond their fundamental. So yes, fertilizer, Deepak Fertilizer and GNFC a great buy.
Perfect.
Okay.
9:37, ladies and gentlemen. We'll just take a detour into some of the record highs that have come in the markets. We have Chennai Petro 10% higher, 1196. Remember, I marked the energy theme right before markets open. HBL Power 3.3% higher. Colgate Palmolive 1.1% higher. The brightness of the smile on the Lal Street increases dramatically with the Colgate at record highs 31.33. And of course, the usual suspects, Castrol. Okay, Castrol is at a record high. How interesting. Gas Authority and NLC India. These are the two stocks showing mild profit booking, but again at record highs. Sakshi, what are you watching?
Very rare stocks, some of them which are buzzing. Oriental Carbon is at a 20% uptick. Muka Proteins is up now 17.5%. It was up 9% when we checked last. Chennai Petroleum, you've already marked 11% higher in trade. Ind Swift Limited is up 10% again. Surya Lakshmi Cotton Mills, again that textile theme is buzzing, 8% higher in trade. Bharti Hexacom, we've already mentioned. Quick Heal Technologies from the IT pack is buzzing. That's up by about 6.5% in trade today. Remember, yesterday there were stocks like Nucleus Software. Before that, it was New Gen Software. Some of these broader markets, Oracle Financial Services, these are the kind of stocks that were buzzing in the broader IT space. So let's discuss with Rudra Murthy, sir, as to how is he viewing the opportunity in the broader market space. Anything that catches your attention at these levels, would you be a buyer, Mr. Murthy, on some of these broader market names like Quick Heal is buzzing, Nucleus, Newgen, Oracle Financial? What is it that looks good to you?
Sakshi, in the list what you have now provided, and if I have to make a chart check, yes, Quick Heal is one stock which is just giving that clear breakout after a long consolidation. It has just today crossed that level of around 555, which has been a resistance for last 1 month. So today the move beyond 555 on Quick Heal definitely looks stronger for me. And if this sustains on a closing basis, that is, if we close today above 555 on Quick Heal, yes, stock can further go up. And there is a short-term small resistance at around 600. So once it crosses 600 decisively on a closing basis, further up move can be seen in Quick Heal. But however, in general, I'll be very cautious on mid and small cap. And also in general, I'll be more cautious in SME stocks. So one has to be very, very careful in this particular area. Large cap still offers more valuation comfort at current market price, and you have to be sector specific and stock specific. Specifically might be IT, might be pharma, or even for that matter, if you can just pick up from FMCG. These are few defensive sectors which I'm right now talking about, and you have to be very stock specific if you are picking up anything from other than these 3 4 sectors which I just mentioned. Be very careful on especially broader market and SMEs which have moved up too much into shorter time.
Okay, fair enough. Adani stocks, Rudra sir, do you track some of these stocks and anything that catches your attention within the fresh momentum? Adani Ports, Adani Enterprises, the entire space seems to be abuzz with action today.
Definitely, Sakshi. Yes, Adani Enterprise and Adani Port are the only two stocks in the same order. I'll be a buyer if I have to buy any Adani group of stock. Adani Enterprises at current level of around 3,100, 120 zone. It's a very, very good buy. Stock is consolidating now for last 1 month, and it is just taking that time to make a fresh up move. So at current market price, it offers a great risk reward. A recent low, if you even take yesterday's low and a recent low, it is at around 3,050. So for a short term trader, positionally, Adani Enterprise is a buy. Keep a stop loss of 3050, which is hardly 70 rupee from current market price. And yes, stock can move towards levels of around 3,350. So from current market price, it is just a great risk reward trade with an upside of about 250 rupees and a downside of hardly 50 60 rupee. It's a 1:5 kind of a risk reward trade on Adani Enterprise. And even if I see charts of Adani Port, similar patterns are seen and stock is definitely looking good. So Adani Port might be at current market price. After a long consolidation, one can definitely buy. Yes, keep a stop loss of around 1,470 and look at targets of around 1,620 to come on Adani Port. So Adani Enterprises and Adani Port, two buys from Adani group of stocks. Rest I will definitely avoid.
Sakshi, hopes of a correction in railway stocks were short-lived. Let's again focus on RVNL. I'm just showing you the price. This is how markets are working. From an intraday low, it's again come back into the green, and you have a 5 rupee uptick. The day's low is in front of you. It should be somewhere like 608, 609 rupees. So that's how it is, ladies and gentlemen. No matter how much caution we advise, and no matter how good that wonderful advice is, but at this point of time, the market is only and only working on liquidity, and it is buying what it feels will be benefited in the budget. Look at HBL Power, a maker of Kavach, a maker of batteries, 666. It's a huge uptick that's coming in. Bharti Airtel is taking it away, 2.3% higher, 1472. You have Coal India, 1.5% higher, 507. And of course, Nifty now trying to scale beyond 24,640. Let's look at stocks that are contributing to the Nifty's gain as far as the uptick is concerned. Of course, the contribution from Bharti Airtel would be the maximum. The stock itself is at a record high, and at the moment 19 points are contributed towards the Nifty's green tick by Bharti. Ditto for ICICI Bank, 19 points, the stock 1% higher. Infosys, Coal India and M&M 8, 4 and 4 points respectively. What's trying to pull the Nifty lower? It's L&T, 0.5% lower, contributing 5 negative points. Kotak 5 negative points, Reliance 4 negative points. What is also taking it away is the power space. I'd like Mr. Murthy to comment on Tata Power, 1.3% higher at 446.55. Series of blocks happening here. Mr. Murthy, Tata Power for you, sir.
Shailesh, again, if you see the chart patterns for last close to 2 weeks, the stock has never crossed 445, and again on the downside, it has strong support at 425. So it is in a just 20 rupee tight band, 425 as support, 445 as resistance, and this has happened for last 1 week. Yes, anytime we might see this breakout above levels of 445, and definitely today there are signs for the same. So I will be a buyer in Tata Power. Might be once it closes decisively above 445, the consolidation or the grinder will be over, and let us buy for momentum as a trader above 445, or it is definitely showing clear signs of that breakout above 445 right now. So I'll be a buyer in Tata Power. Keep a tight stop loss on a closing basis below 425. Yes, it can go back to its previous highs, which it has made at around 460, 465. And once it crosses 465, a fresh momentum move towards 500 can come. So yes, Tata Power is a buy. 425 will be my stop loss, and a close above 445 confirms the momentum on the upside.
Fair point. What else is clicking in trade? After a very, very long time, Piramal Enterprises is back in action at 969, 970. Keep an eye out also in this market as far as this one's concerned. Let's get into FNO. Let's look at stocks where you see smart uptick of open interest. Colgate Palmolive, record high. Should we check it? Yes, we should. Mr. Murthy, Colgate Palmolive, what are the stock charts telling you? This is accompanied by a 4.5% rise in open interest, and one of those rare FMCG stocks where the smile gets better and better.
Yeah, Shailesh, definitely a stock looks very, very strong. And as you have mentioned, today's addition in open interest is signaling that yes, for last 2 days, whatever positive move it is showing, that can be because of even good results expected from market. Yes, Colgate for me is a buy at current market price, and on dips to 3,100, I'll be a buyer. Not just Colgate, look at even stocks like ITC, look at Hindustan Unilever. All these are showing definitely signs of strength. And as I mentioned today itself, yes, I will be looking at stocks from FMCG. I'll be looking Pharma as one more sector which can do very good from current market price, and especially mid-cap Pharma. And also IT is another area where you have a lot of good stock picks which you can look from this sector in general. So FMCG, IT, Pharma can definitely do good from current market price. And yes, Colgate, Hindustan Unilever are the top picks which I can see from FMCG.
Okay, got that. So we'll continue to focus on the FMCG space. There is no let up in the telecom stocks. Bharti Airtel now about 2.3% higher. Vodafone Idea in the FNO space up by 3%. Bharti Hexacom is now almost 9% up right now. We did talk about Bharti Airtel with you, Mr. Murthy. What about Bharti Hexacom? Would you chase the momentum that is being seen here?
See, for me, Bharti Airtel definitely looks good, but when it comes to Bharti Hexacom, yes, on chart, the today's move, whatever you are trying to see, can be good enough, but I don't know whether these moves will sustain or not. And for me, Indus Tower and Bharti Airtel will be my two top picks from this sector.
Okay, got that. So that's the telecom space for you. Again, there is an uptick in Oracle Financial Services software within the FNO space. That's again ticking higher in trade today. Apart from this, consumer durable space seems to be picking up some pace as well. Let's look at some of the counters right here which may be contributing. You have Blue Star, Century Ply, Crompton, Havells, mild gains coming, but it's like a broader participation that is taking place within the market. So the remember, the stock markets are hovering near those record high levels. We hit a 24,650 in trade today, and we are hovering just at those record high levels on the Nifty, and very far and few between very heavyweight counters moving very sharply that are contributing to the gains. It's a broad based participation that we can see across the board. I think now all the sectors, barring just a mild downtick on PSU banks, rest all of the sectors, and that's also just flat. All the sectors are participating in trade today. Realty, consumer durables, metals, small caps are also participating. Small and mid caps, Rudra sir, you've been pointing out that you are very cautious on the small and mid cap space. But how would you really look at stocks like Raymond, for instance, that is showing no sign of any let up because of the kind of momentum that we saw after the announcement of the demerger of the real estate business? Your own sense, how should one participate whenever given a chance in Raymond after this kind of a move has taken place?
Yeah, Sakshi, let me make it very clear that yes, in general, again, let me underline in general, I'm not comfortable when it comes to mid and small cap, but however, still, yes, we can pick some stocks very choosy. And if you are very comfortable in terms of both valuation and earnings in future, the growth, whatever you are looking for, if that is still available and still price is fairly priced, I will be still buying mid and small cap, but in general, I am not comfortable. And especially when I spoke about defense, railways, or even shipping companies, these are areas where I'm seeing a lot of froth built up. 700 800% kind of a move in very short period, and buying at current market price, I'm not with it. But however, if you have bought it earlier, yes, you can still hold on if you are ready to have that long time frame. But now coming specific on Raymond, yes, this is a stock to buy even at current market price. Yes, in mid and small cap also you have some stocks where still at these prices also I will be a buyer. Raymond for me is a stock which took a lot of time to move beyond levels of around 1800, and that was a fair price for Raymond to enter. But now even at 2300 might be, yes, you are bit expensive compared to 1800, but I have not seen this stock moving 700% in last 7 months, and still I have comfort in Raymond at current market price. I will not be surprised to see 3000 target on Raymond if someone holds it for at least 1 year from now. Might be a fair price to enter, would have been around 1800, which I just now mentioned. If you are a buyer at current market price, buy some quantity here, see if you can get any dips to levels closer to 1800, 1900, and buy more. Whenever you see market correction, generally all stocks will be painted in the same brush and everything will correct. Those are times when you have to buy stocks like Raymond at around 1800, 1900. I'll be buying even at current market price, and on dips to those levels of 1900 for a target of 3000. Raymond is a clear buy.
The Nifty Realty Index, Sakshi, is the top performer today, up about 1%. And apart from Raymond, you see a very smart move coming into Prestige Real Estate, 2.5% higher, almost 1800. You have Shobha Developers up by about 2%, 1925. And of course, Suntech Realty, 4% higher, DLF 0.5% higher, Godrej Properties 1.1% higher. All of them moving in strong gains. What's taking it away? Again, the telecom pack. Mr. Murthy is already marked Indus Stars 1.6% higher as far as futures are concerned, 403.6. What is also moving is Coal India at the moment buzzing 1.8% higher at 507, and what's also moving is HPCL 2.5% higher, 357.50. Let's look at the volume space now. It's already half an hour to trade. A lot of action would have come up. While railway continues to dominate the intraday theme, there are mild red ticks on RVN and RFC, but they are the two top trading counters, 848 crores, 820 crores respectively. Chennai Petro, record high, 12% higher, 1218 for you, already showing 658 crores worth of transactions. IRB Infra, 4.5% higher, 7142. Then you have Mazgaon Dock, you have Vedant in the green, MRPL 3.5% higher, and of course ONGC 1.1% higher. I am purposely not marking HDFC Bank and Bharti Airtel because we've discussed both of them. HBL Par, it just had an analyst meet yesterday, is showing very strong traction. Needless to say, this is a record high, 672. I'm sure it's in volume buzzers as well, with very high volume activity. Century Textiles, 6.7 lakh shares have been traded, 2.5 times the 5-day average, 4% higher. This is of course news driven. Let's get Mr. Murthy on Century Textiles. Mr. Murthy, what are the charts of Century telling you?
See, Shailesh, for me, 2100 for this stock is a very strong support. So, keeping that as a stop loss or just slightly below 2100 strong support, you can definitely look at buying Century Textile. But it is just a move which is more or less a retracement kind of a move, and more strength and momentum will come to this stock once it crosses that hurdle of around 2380 to 2400, which has been a stiff resistance. So if you are buying right now, keep a target which is more or less closer to 2380, 2400, and you have to have a strict stop loss below 2090. So for me, it is more a retracement trade, which you can see in Century Textile. Decisive move will come only once it crosses 2400.
Okay, decisive move, Mr. Murthy, is on Infosys. 1732, 1.5% higher. You have to take it away. The earnings are day after tomorrow, and a very, very strong move coming ahead of earnings. It's not a price breakout, but definitely, it's not a volume breakout, but definitely price is itching higher.
Shailesh, I'll be very clear on my view on Infosys. From 1400, the stock has moved to 1730 zone currently, which it is trading at. And this move from 1400 to 1730, it has just given in a matter of 1.5 months. For a stock like Infosys, which is such a large cap company with such a huge market capitalization and might be the second biggest to TCS when it comes to sector wise market cap, for me, this has been a very, very strong move and a swift move. Even expectation of earnings has been good. And if you have seen both TCS and HCL technology, the results have been definitely good. So for me, Infi can also come out with good result, but I'm only worried about margin of safety and the swift move which it has already made from 1400 to now levels of around 1730. So if you want to enter fresh at current market price, I may not see much margin of safety, but yes, if you have it, hold it, you will expect good earnings, and I won't be surprised to see good earnings from Infosys, but most of it is already in the price, and entering at current market price as a short-term trader may not offer a good risk reward.
Okay, got that. So that's Infosys for you and how you should be approaching it. Thursday is when the company will come out with the earnings, so we'll keep an eye out on that too. What else is buzzing and where we can take last few stocks and recommendations from Rudra Murthy sir for trade today? Let's also bring up for you, sir, the entire power space. How are you really looking at the moves right here? Adani Power is abuzz with action. HPL Power is abuzz with action. How are you looking at this entire space? This is one space that was seen as a huge theme that has unfolded over the last 6 to 8 months odd, periodically moving up very, very sharply, presenting a lot of opportunities. Can one still participate with a long-term horizon, and where should one really look at?
Yeah, Sakshi, great question. Right now we spoke about Tata Power, and yes, power as a theme can do very good even from current market price. Keeping in mind the Modi 3 government and its focus on power, I feel stock like Power Grid, even stock like, let us say, Tata Power from private sector, if you want to pick Power Grid from PSU, or even stocks like Coal India, ONGC, these are all areas where still indirect play on power, indirect play even on let us say stocks like your OMCs, where you have these BPCL, HPCL. These are all stocks which can still do good, and I see valuation comfort. So one has to definitely move from railway, defense, shipping to these places which is still in PSU, where you have valuation comfort. Move to Power Grid, move to Coal India, move to even stocks like, let us say, ONGC. And for me, another very, very important point on budget. In fact, we can have an half an hour discussion only on budget and the technical view, but very briefly, I'm giving my very important points on budget. I feel come what may, they will ensure physical prudence is maintained, and even last year when they had everything to give before election, the government was very clear on fiscal prudence, which is very closely watched in the budget, and I won't be surprised if we see a downtick in physical deficit from 5.1 expected to even 5 or even 4.8, which is very good. If you see GST collection, income tax collection, if you see even increase in the tax base, if you see even the foreign exchange reserves, what we have, global markets, even if you see US looking for interest rate cuts, all this is telling to me, yes, this liquidity driven rally can continue for further more time, but you have to be very stock specific and sector specific. Move from high beta to low beta, move from sectors where you had much of these moves in, let us say, shipping, defense, to areas like IT, pharma, FMCG, and be very stock specific. Be careful in general for mid and small cap space, and still this market can give you big money if you choose the right sector and if you choose the right stocks. And any dip in market might be post even budget. If you get that as a trigger, use it as an opportunity to buy good companies at fair price, which has more margin of safety for you, and that can definitely give you profits both for short term as a trader and for a longer term as an investor.
All right, this market can continue to give you big money in case you are wise enough to pick the right sectors, right stocks at the right price, at the fair price. That's the view coming in. Thank you so much, Mr. Murthy. Always a pleasure to host you, and the clarity with which you give your advice to all our viewers, always appreciated. Viewers, at this point in time, hovering near record high levels, 24,631 on the Nifty, a 45 point of an uptick can be seen. Realty, IT, consumer durables, oil and gas, FMCG, these seem to be the flavor, and stocks like Coal India, BPCL, ONGC, Bharti Airtel, Infosys, HUL. These are the top movers on the Nifty in the morning hour of trade. On the downside, you have Shriram Finance that's now seeing some profits being taken off at the higher levels. SBI Life, Kotak Mahindra, L&T and Bajaj Finance are some of those top losers right now. FNO big moves, Vodafone Idea. You have Piramal Enterprises, Bandhan Bank and India Cements, and also Balrampur Chini that's also buzzing in trade. With that, viewers, we wrap it up at that. Thank you so much from both Shail and me for staying on with us in the morning trade, but do stay tuned as the action will continue on the other side. A lot of earnings conversations and of course daily calls that comes back at 12 noon, which answers all your stock queries. Stay tuned.